Yes, and thoughts of home. With markets setting more records today, what's left to push stocks even higher as the Dow hovers around 30,000? My next guest says Dow 35,000 is the next stop, and the driver to get there is the consumer. Joining me to discuss is Neil Hennessy. He is the Chief Investment Officer at Hennessy Funds. Neil, it's good to have you, and I read through your kind of 2021 playbook, and to me, it's all about pent-up demand. Is that right?
Well, I think so, Kelly. I mean, what we try and do is look at history, and history tends to repeat itself. So, I mean, when I start to look back over the years and what corporations have weathered, be it more restrictions, more regulations, whatever, they seem to come out okay. And now we're just dealing with this virus situation, and companies are still doing well. But the bottom line is the economy's fundamentally in good shape, and there's plenty of cash on the sidelines. It's just, when does the economy open up 100%? And that's the question. But where interest rates are now, what you're getting on yield versus what you're taking on risk, the only place to be really is in the stock market.
Neil, what about those who say to you, okay, we're already at 30,000, we're already up, whatever it is, 60% from the lows. You know, we have a market that has a lot of sentiment at extremes, call option volume, that sort of thing, at the kind of highs that would indicate, you know, it's time for a reset here. What gives you the optimism to say we can confidently march from 30 to 35,000?
Well, first of all, there's being a shift from growth to value, and that will be a slow climb. Because if you just look at the NASDAQ, okay, up 39%. But Kelly, if you take out Amazon, Apple, Google, Microsoft, Tesla, and Facebook, you take those 6 companies out, and the NASDAQ is only up 15%. So essentially, you've had 6 stocks out of 3,300 move the market. That's unrealistic. But when you look at, for instance, the Dow Jones, it's yielding 2%, over 2%, versus a 10-year treasury at 90 basis points or a 30-year treasury at 1.6%. And to be honest with you, which I wasn't thinking about until this morning, a triple B bond, a lower quality average 10-year corporate bond, is yielding a little over 2%. So people are reaching for yield when they should be looking for value, and that plays into the dividend story.
Sure. I know dividends are something you're excited about. And again, you guys do a lot of mid-cap names. Let's talk also about the banking sector and why you think that could be one place to be. I know for some brick and mortar plays as well, those are areas you'd be keen on. Just could be kind of flesh that out for us.
Well, interesting, the Hennessy Midcap 30 Fund, it's quantitatively driven, Kelly, so we don't have a choice in what 30 stocks we buy. They come into the portfolio, and then we try and figure out what happens there. So the banks did not come in. They didn't come into the portfolio, not because they're not strong financially, very, very strong. The problem was they had price momentum on the downside, not price appreciation on the upside over a 3, 6, and 12-month period. So you look at the banking sector. If you're going to pick a sector, I would say yes, that's a great sector. You have to be patient, but it's a great sector to be in. When you talk about brick and mortar, I mean, it's just reasonable to assume that for instance, there's $4.4 trillion sitting in money market funds. Once restaurants, and I'm sure you'll agree with me, Kelly, it'd be lovely to get out and go to a restaurant at night inside. It'd be nice to get out and go to a mall and just browse around and buy something instead of ordering your food online and buying your presents online or your coats or clothes. So I think when the economy opens up, companies that are only down, earnings are only down about 12%. And look at what we faced in here, Kelly, at the S&P and 500 and during this year. And so can you imagine when it opens up how quickly it's going to come back? Because people have money and they want to spend it. That's why you can't get an RV. That's why you can't get anything to use outside, because they don't have them in stock.
Yeah, no, and I take your point. A couple of the names, LKQ, Quanta Services, ticker PWR, Berry Global, ticker BERY. Those are some names to watch in that mid-cap 30 fund that you mentioned. Neil, thanks for coming on today and talking all about what 2021 could hold. We really appreciate it.
Thank you, Kelly.
Neil Hennessy. Tyler?
Kelly, still